Are you looking to invest in property? If so, you may want to consider buying To Let Investment UK. This investment can be a great way to generate income and build wealth over time. Hello everyone, welcome to Wealthy Wisdom. If you're new to this channel, do like and subscribe to the channel. In this video, we will discuss things you need to know about real estate, Buy to Let Investment UK, that no one told you. So if you're looking for an exciting and profitable investment opportunity, Buy to Let UK may be right for you. What is Buy to Let Investment UK and how does it work? Buy to Let investment in the UK is when an individual purchases a property to rent out to tenants. The aim is to generate income from the rental payments, which can be used to cover the mortgage repayments and other associated costs, such as repairs and maintenance. To be successful, Buy to Let investors carefully research the property market and identify areas with high demand for rental properties. They also need to be aware of the potential risks involved, such as void periods when the property is empty and not generating any income, and tenant default when tenants fail to make the rental payments on time. If you're considering investing in Buy to Let property in the UK, it's essential to seek professional advice from a qualified financial advisor. They can help you understand the risks and rewards associated with this type of investment and provide guidance on the best way to finance your purchase. The benefits of Buy to Let Investment UK. There are some potential benefits associated with Buy to Let investment in the UK. For example, suppose you purchase a property in an area with high demand for rental properties. In that case, you could potentially achieve healthy rental yields, the annual return on your investment. This could help you to cover the mortgage repayments and other associated costs and still make a profit. Another benefit is that you'll have the potential to generate capital growth on your investment. This is when the value of your property increases over time and can be achieved if you purchase in an area with strong demand for property. If you're looking for a long-term investment, buying to let could be a good option. This is because properties tend to increase in value over time, so you could see a healthy return on your investment when you eventually sell up. The risks associated with Buy to Let Investment UK. However, it's essential to be aware of the potential risks associated with Buy to Let investment in the UK. For example, purchase a property in an area with weak demand for rental properties. You could find void periods when the property is empty and not generating income. This could put your financial position at risk if you cannot cover the mortgage repayments and other associated costs. Another risk is tenant default. This is when tenants fail to make their rental payments on time, leaving you out of pocket. It's important to carefully screen tenants before offering them a tenancy agreement, as this can help reduce the risk of default. It's essential to seek professional advice from a qualified financial advisor. They can help you understand the risks and potential rewards associated with this type of investment and provide guidance on the best way to finance your purchase. How do you find the best Buy to Let Investment UK opportunities? First, you need to research the property market and identify areas with high demand for rental properties. This will help you maximize your chances of achieving healthy rental yields and capital growth. You also need to be aware of the potential risks, such as void periods and tenant default. It's essential to seek professional advice from a qualified financial advisor before making investment decisions. Finally, you need to consider how you will finance your purchase. Buy to Let mortgages are available from many lenders, but it's important to compare products before applying. This is because Buy to Let mortgage rates vary significantly from one lender to another. If you like this video, don't forget to like and subscribe to the channel. How to choose a suitable mortgage for your Buy to Let investment property. Choosing a suitable mortgage product is essential if you're considering investing in Buy to Let property in the UK. This is because Buy to Let mortgage rates vary significantly from one lender to another. It's also important to consider the fees associated with taking out a Buy to Let mortgage. Some lenders will charge higher fees than others, so comparing products is essential before applying. When choosing a Buy to Let mortgage, you must consider the type of property you're planning to purchase. For example, if you're planning on buying a flat or an apartment, you'll need to ensure that the mortgage product you choose allows for this. It's also worth bearing in mind that most Buy to Let mortgage products require you to have a minimum level of equity in the property. This is typically around 25%, but it can vary from lender to lender. What are the different types of buy-to-let mortgages? There are several different types of buy-to-let mortgages available, so it's essential to choose the right one for your circumstances. The most common type of buy-to-let mortgage is an interest-only mortgage. This type of mortgage allows you to make lower monthly repayments as you only pay the interest on the loan each month. However, this also means that you'll need a repayment vehicle such as an endowment policy to repay the capital at the end of the mortgage term. Another type of buy-to-let mortgage is a repayment mortgage. This allows you to make monthly repayments, including the interest and the capital. This means you'll have the loan repaid at the end of the mortgage term. Which insurance policies do you need for your buy-to-let investment property? The most important policy you'll need is buildings insurance. This will cover the cost of repairing or rebuilding your property if it's damaged or destroyed by fire, flooding, or other disasters. You'll also need to take out landlord's liability insurance. This will protect you financially if your tenant is injured or dies due to an accident at your property. It's also worth considering taking out contents insurance. This will cover the cost of replacing any belongings that are damaged or destroyed while they're stored at your property. How much rent should you charge tenants for your buy-to-let investment property in the UK? The amount of rent you charge tenants will depend on several factors, such as the location of your property and the type of property. You'll also need to consider the costs associated with running your buy-to-let investment property, such as mortgage interest payments, insurance premiums, and repair and maintenance costs. To find out how much rent you should charge tenants, it's worth speaking to a letting agent or a property management company. They'll be able to give you an idea of how much rent you could charge for your particular property. What are the tax implications of investing in buy-to-let property in the UK? The tax implications of investing in buy-to-let property in the UK depend on your circumstances. If you're a basic rate taxpayer, you'll be liable for 20% capital gains tax on any profits you make when you sell your property. If you're a higher rate taxpayer, you'll be liable for 40% capital gains tax on any profits you make when you sell your property. You may also be liable for income tax on any rental income you receive from your tenants. The amount of tax you'll pay will depend on your marginal income tax rate. It's also worth bearing in mind that you may be liable for inheritance tax on your buy-to-let property if you die. How do you manage a buy-to-let investment UK property portfolio? One option is to use a letting agent. They'll be able to deal with all aspects of renting out your property, from finding tenants and collecting rent to dealing with repairs and maintenance issues. Another option is to use a property management company. They'll be able to provide you with a range of services such as rent collection and repair and maintenance assistance. Alternatively, you can manage your portfolio yourself. This will give you more control over your properties but also mean that you'll have to deal with all aspects of the rental process, from finding tenants to collecting rent. Real estate can be a significant investment, but there are things you need to know before jumping in. Buy-to-let Investment UK can be a great way to secure your financial future. Just make sure you do your homework first. We've outlined the basics for you here. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to this channel, and comment below. Thank you and goodbye.